Last Friday, spot gold traded in a high-level oscillating and strong consolidation trend, continuing the rebound momentum since this week during the session. Repeatedly consolidating in the key price range, bullish momentum remained stable, and it finally closed with a strong pattern, with the overall market sentiment tending to be cautiously optimistic. Spot gold rose by $91.18, closing at $5,262.21. Fundamentally, the core factor driving gold prices this week remains geopolitical situation. The third round of indirect U.S.-Iran nuclear negotiations concluded yesterday, and the two sides ultimately failed to reach a substantive agreement, still having huge differences on key issues such as the disposal of nuclear facilities and the lifting of sanctions. Tensions in the Middle East remain high. The U.S. has repeatedly publicly threatened to take action and deployed military forces in the region. Market risk aversion remains at a high level, continuously providing solid support for gold prices, which is also the core driving force behind gold's sharp rebound and hitting a phased new high today. At the same time, the U.S. plans to raise some tariff rates from 10% to 15% or even higher, leading to a resurgence in trade policy uncertainty, which further exacerbates market concerns about the future economic outlook. As a traditional safe haven and hedging tool, gold has significantly increased its attractiveness in this environment, effectively limiting the downside space of gold prices. In addition, the market also continues to pay attention to recent remarks by Federal Reserve officials to find clues for the future direction of monetary policy, and changes in relevant news will still affect the short-term trend of gold prices. Overall, the current geopolitical risks have not subsided significantly, and safe haven demand persists. Coupled with today's sharp rebound of gold prices and the breakthrough of key resistance levels, the downside space for gold prices is relatively limited, and the medium-term trend remains bullish. The core logic of the continuous tension in the geopolitical situation has not changed. In the short term, bullish momentum is sufficient and the downside space is limited. In the long run, gold's hedging attribute remains prominent and is expected to continue its upward trend. Disclaimer: all content is for reference only and does not constitute investment advice. If you trade based on this information, you are responsible for your own profits and losses. Please subscribe, like, and share. Thank you for watching.